Welcome back to Behavioral Finance and FinTech. I'm Andy Kim, your Dr. Finance. This week we're going to study the concept of short selling and then GameStop, all this kind of short squeeze. Exciting stuff is waiting for you. And for that part, we need a better understanding about high frequency trading. So I'm going to go through high frequency trading first and spend 10 minutes or 20 minutes about it. And then the next video, sets of videos, will be about short selling and arbitrageurs, right? So wait for that and then let's go. High frequency trading, right? The conventional trading platform had been like that, right? It's already passed. Like 70s and 80s and 90s, you see Chicago Board of Trade and New York Stock Exchange. See how many market makers are just swarming and then just yelling and calling for the price and a bid and ask, and then essentially the war takes off, right, from the buy side and sell side, and so the price gets determined in real time. But the thing is, over there it's a human-based trading, and then it's so fierce. We say it is an open outcry system, open outcry. You outcry like that, okay? And then it's so fierce, so that it's a urban legend or some spooky story says that at one point a person, the market maker, gets a heart attack in the middle of that crowded area and busily yelling like for their own money, right? To the extreme. One person gets, heart attack. There's no way of rescuing him or her because nobody cares about him or her. It's so inhumane. You can think about it that way. Some people died at that spot. I heard some reports about it. So that's the fierceness of this marketplace. Market is a living being, right? And it's so dynamic. But these days, right, many things changed into machines, right? Do we see that kind of trading places so far? Not anymore. Not in New York Stock Exchange. No, in Chicago Board of Exchange like that. It used to have like thousands of people swarming around like that before. But these days, only like 10 people just walk around and then check out the machines if they are doing okay, that kind of things, right? So that's the reality, okay? With that, machine trading has been expanding a lot. So a lot of human mistakes that could have been over here got reduced, okay? And that's where a lot of mathematicians get in there and then do some high frequency trading. We're going to talk about that high frequency trading, and I'm going to summarize a story in this book, Michael Lewis' documentary novel, based on the true stories by Katsuyama and then Mr. Park Gyopo? Gyopo. Yes, there's a Canadian, Korean Canadian guy that you see over here. They're friends, good friends, and then Katsuyama is main character over here. And then they're all working at Royal Bank of Canada in Wall Street. So what they found is nicely written in that book. So I strongly recommend you to go ahead and read that book. High frequency trading, what was the story over there? Katsuyama, right? Says that, well, let's imagine that, you open a screen of stock trading as you're a stockbroker and then stock buying and selling, right? On the screen, let's say you found 100,000 shares of AMD, Lisa Su's AMD, yes. Somebody, right? Somebody that we don't know posted a sell order at a limit order, 지정가 주문, at $90 per share. Okay, it's not market order, but you see a limit order of AMD for $90 per share. How many? 100,000 shares, right? Now, with that, let's say you place the buy order and then enter it exactly $90 per share, 100,000 shares. Give it to me, baby, right? If you had that in late 1990s, almost 100% of the stocks got executed, and then those 100,000 shares are now yours. But in early 2000s, things get slippery. Only 80% got executed, and 20% of it, nowhere. It disappeared. And then the price is slightly updated in upward. Like, for example, $90.02 or 4 cents, like that. Okay? Okay. And then in late 2000s, only 60% would have gotten executed. And then remaining 40% disappeared. Hey, phantom. And it's showing up at slightly higher price again, right? 90.02 or 05, right? Whatever. As you punch the enter button on your computer. But what the heck is going on? Why was there mystery? So they delve into it and find out the cause and remedy it, right? What was their strategy? Well, if you think about the stock exchange, right? New York Stock Exchange, where does it get executed? If traditionally you see Peter Tuchman over here, the most photographed market maker working in New York Stock Exchange, right? Famous figure. His nickname is what? Einstein of Wall Street. You can find him in the Instagram and then be a fan of him, right? I am one of them. And then you see this, right? Jim Cramer's, right? CNBC tables in New York Stock Exchange. But this is not a real place where the exchange takes place. Instead, this is where the real exchange takes place. That's server, right? Mainframe server called data center. Your transaction takes place and gets recorded and it becomes data. So that's why it's called data center, right? You see supercomputers working for there, right? And then many of the issues involve something called co-location. Different brokerage houses like Citadel and then all these kind of brokerages. They are the members of the New York Stock Exchange, and they try to locate their servers closer to mainframe servers of New York Stock Exchange. Why? Because the distance is time and time is money. So we want to get more advantageous and then we want to get executed faster. The closer you want to get it. But the thing is, the exchange have to be fair to every brokerage houses. So what do? They keep the same equal distance, equal length of land line, right? You must have heard about this many times by now. But anyway, so that's co-location problem, and let's assume that they, get equal distance anyway. But the thing is, the distance from Wall Street to each data center possible available for New York Stock Exchange is an issue. Okay, the distance from here to there to there to there to there, 4 different places. BATS, B-A-T-S, not BTS, and then Direct Edge, and then Amazon. It's not Amazon that we know, right? And then the last one is NYSE data center. You see Manhattan Island, Hudson River. This part is New Jersey, right? And that's New York City is like all over Brooklyn, Bronx, and Manhattan, and then these areas. So you see these 4 data centers and where the trades get executed. Okay. And then how far away are they from each other, right? Driving distance wise, it's like 1.5 hours distance, right? So seems like it's quite close to each other. Seoul Incheon 거리, like Seoul to Incheon or something. Maybe. What's the big deal over there, you may say? Given that the speed of light is 300,000 kilometers per second, which means 7.5 times around the Earth, right? Per second. What's the big deal here? But let's see. Okay. Your blinking of an eye takes like 0.3 seconds. And then, given that this distance, right? Nothing should be important, right? But wake up, right? Here you see the distance from New York Stock Exchange, New York City, to the first data center, BATS, the second data center, Direct Edge, and the third data center in the NASDAQ, and the fourth, the last one, New York Stock Exchange data center. 4 different places. The thing is, those sell orders, limit sell orders at $90 per share, 100,000 of them, right? Where are they hanging around? Okay, somebody who's selling that 100,000 shares. Okay, one investor places 100,000 shares of selling AMD. Usually they spread those shares all around 4 different places. They don't concentrate on one place, right? The thing is, they try to take advantage of the time difference. What kind of time difference could there be? You may think, like, it's, split second. It should not be a big problem. But the thing is, even before thinking about New York Stock Exchange, there are 12 different stock exchanges in the United States, and there are 4 data center in New Jersey. Okay, the distance is a real problem actually. As you push enter, and then the first order gets executed at BATS first, and then NYSE the last. The time gap between these two is like 2 over 1,000 second. Okay, 1000분의 2초. Like it's like a 1 over 500th second, right? Compared to your eye blinking, it's trivial. But wake up. If you multiply the numerator and denominator by 1,000, it becomes 2,000 over 1 million second, right? 2,000 over 1 million. Now what? The thing is, Katsuyama and then Mr. Park, they found that somebody was waiting for Katsuyama's order at BATS and revised their sell order, limit sell order, and upwards, increasing the price slightly in NYSE. So there seemed to have been a bots, right? Robots waiting and see, watching my movement. And then once they receive my order over here, they immediately call this guy and then increase the limit sell order by 2 cents or 4 cents or whatever it may be. Within that split second, right? 2 over 1,000 second. What the heck? That speed seemed like what? 476 over 1 millionth of a second. Kidding me, man? So what did they do? If you're going to, make a phantom quotes like that, well, we're going to attack you first for the longest distance ones, and then spread out our orders in a reverse order of distance, so that the enemy must be waiting in BATS and then try to execute it in the NYSE. But I attacked the hard place first, right, or the center place, NYSE first, and then subsequently attack the other one, and then finally the SPY over here, I just attacked them. By this, like a 시간차 공격 kind of thing, it's like a time difference attack, being another HFT, right? They were successfully executing 100% of their trades, right? So HFT to HFT, eye to eye, okay? Tooth for tooth, eye for eye, HFT for HFT. The arms race goes on. Given that the other guys on the other side is using HFT, there is no way for me not to use HFT. I have to be the one to be the executor like that. Okay, so that's the hard part. And then what's the consequence? There is a negative consequence associated with HFT. Okay, they sometimes the stock index plunges down by about 10% in 5 minutes without news about those macro news or whatever company news. The machines gets traded automatically and feedback each other, so that once the downward feedback happens, it just crashes like crazy within 5 minutes or 10 minutes. We call it flash crash, right? So price instability gets happened these days a lot more frequently. That's a negative side of high frequency trading. But is there any way we could just ban this high frequency trading? It's not. It's not possible. Given that somebody else is doing it, and then there is is it HFT a villain to the capital market or a hero? There's a debate. There has been a debate about this usefulness of HFT. Then what they find is that, I should stop and shut up my mouth. The HFT is useful in a different respect. When? Well, for the stocks or small stocks, right? Small stocks, that gets rarely traded, maybe once per day, right? What's the fair price of it? Sometimes only, it gets executed one trade per week or one trade per couple of days. Then it makes you afraid. What is the fair price that I should, buy and sell? In that moment, right, that kind of stocks, the high frequency trading could be a useful tool because they keep on throwing out phantom orders, buy and sell, well, very quickly, right? So that you could see a benchmark, a fair price, and then get the price executed. So that's a benefit part of it, right? Oh, beneficial part of HFT. And then HFT is also useful when you try to sell a bunch of stock or block trade kind of things. Not block trade per se, but so many big numbers of stocks. You wanna sell it without impacting the price. For example, if you want to sell 1% of the Samsung Electronics in a given day, there will be a crash, right? Market crash. Whole Korean stock market. Because 1% seemed like a small number, but when it comes to, the actual floating amount of the stocks, it's huge. So the price impact will be huge. How can we minimize it and then still get traded? High frequency trade is a service that enables you to do it. So that's where it gets useful. Are HFTs villains or heroes? Yeah, I told you about this. Yes. Now, next video, I'm going to talk to you about the short sellers. So wait for that. Thanks for watching. Bye.